My name is Danny, and like I said, this is the live Q&A webinar. The purpose of this webinar is to let you guys ask what kind of questions you want. We're going to go through some questions that let me just show you how the webinar is going to happen. Then we're going to understand a bit better what will happen in every step. Okay, so firstly, we're going to take off with comment questions. Those are questions that we've gathered from previous live Q&A webinars and some other webinars, okay, which they share in common. And those are the questions. And then we will have dynamic questions, which will put down the questions from you guys, okay? So that means that you can put down questions from now till the end of the webinar, all kind of things related to trading, related to AvaTrade, related to the services. Feel free to do that. And of course, you don't have to wait for me to get to a certain topic. I'm just gonna answer it accordingly. And yeah, so feel free. This is the live Q&A. Okay, and thirdly, we're gonna have I'm gonna share with you some information, some links. And lastly, we'll have analysis. Okay, this is only if time will allow us and if we're not going to get questions related to analysis. Otherwise, perhaps we'll put time into something else, okay? But feel free to ask it anyway if you need additional explanation or something. And okay, so we're going to open with the disclosure. Then we're going to see that, okay, it seems okay. And we will begin. Okay, so any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, a recommendation, or a suggestion. This webinar is recorded, okay, and it will be uploaded to YouTube later on. So if something is not fully understood or you just want to see the webinar again, you want to take notes or anything like that, you are more than welcome to find it in our channel on YouTube. Okay, so I'm gonna go to make sure that the webinar is recorded, as I just said, and then we will begin. Thank you very much. Okay, everything seems in place. We're gonna begin, like I said, with the questions that we have received, and then we will move to the questions that we have got. Okay, so the common questions are: how to use signals? Is $100 enough to make profits? Okay, what is risk money management? Okay, how does the leverage works? Okay, how can I get an account manager? Okay, okay. So we're gonna begin from the beginning. We will have a nice notepad to put down some notes. Okay. And obviously we will paste the question and answer it on the chart. Okay. All right, so how to use signals. First, we're going to elaborate what are signals, but it's even more important that you will know where I'm at. So this is called a web trader, okay? And to get to here, you need to log in with your email and password to avatrade.com. Okay, and you're supposed to get to the web trader. If you don't see this interface, you can just contact the customer service or your senior account manager and they will assist you. Okay, it should be there by default, but just in case it doesn't, so you can contact your senior account manager or the live chat to apply that on your account. Usually it can come like this or even folded. It doesn't really matter. You can click here on the two arrows to make it go down, or you can click and drag, okay? And to open the sidebar, usually there is a sidebar here that you can put your position. You need to click sell or buy, okay? Both will make it appear here on the right side. And okay, so this is about the web trader. I don't think that we really need a guide through. We had a webinar yesterday that was the ultimate trading webinar for beginners, which we've done a lovely guide through. So there is no need to waste our time today. So we're just gonna jump to the question. Okay, so how to use signals? Okay, so first of all, what are signals? Who knows? Guys, signals is something that we, as a beginner, you're gonna hear this word a lot, you're gonna see this word a lot. Who knows what signals are? Okay, Salah, you're saying instructions what to buy or sell. Okay, that's true. Signals, guys, are truly instructions, okay, but they are more of an indication, okay? It's not something, for instance, look, we have signals here provided from Discovery. Discovery is this lovely button here. And along with Discovery, you have this icon. Okay, if I click on that icon, it's gonna open here at the sidebar, it's gonna open some specifications, some resistance, some support, okay, some levels here, sell, buy, okay, key levels, very interesting, scenario, okay, but eventually this is something that's supposed to come as an addition to your analysis. Okay, signals is not something that I will blindly follow. I mean, I would use signals if I want, okay, but I'm not gonna blindly jump on every signal that I see. I must make sure that the signal is okay, that it's verified, and it suits to my strategy. Maybe this signal is not even suitable for me, right? Okay, there is a question here. I have some difficulties with trolling. Can you tell us if every brokerage company has rules of withdrawal? Not really sure. Let me put your question down, even though I think those are two questions, which, okay, but let's see. Okay. So first I'm gonna demonstrate how to withdraw, which I think that will be the most appropriate thing to do. And we will get to that. Thank you for the lovely question. Okay. All right, so back to where we were. Now, signals are instructions what to buy or sell. Okay, to use signals, like I said, I must make sure that the signal is valid and it's accurate as well, as much as I'm expecting it to be, to indicate for me what to do. Okay, because we said signals are instructions, but at the end of the day, instructions needs to make sense. Okay, so in other words, bottom line is signals could be helpful. The way to use it is an additional layer to your analysis. Okay, let me just put the answer here underneath. Signals are instructions what to buy or sell and should be used. Maybe I shouldn't say should be used, because people can still sell or buy without doing analysis. But how I think they should be used is with careful. Okay, so signals are instructions what to buy or sell. Could be used as additional layer of analysis. Oops. Analysis, right? Yeah. I'm gonna make this one a little smaller. Maybe too small. Oops. How is it now? Okay. Okay, so if it's too small, so tell me, okay? I don't remember what usually I put it, maybe 12. Okay. Is $100 enough to make to make profits? Is $100? Is it enough? Is it enough to make profits with $100? That looks 1,000 times better. It's enough to make profits with, okay. Now, what do you guys think? Is it enough to make profits with $100? Let me say that you can make profits with everything, okay? Basically everything, but it's not exactly, let me just show you, okay? What we are looking at right now is Australian Japanese yen, okay? Australian dollar versus the Japanese yen. Okay, we're gonna go with the buy just for the sake of the example. And we're going to go with 0.01. Okay. Guys, this is the bare minimum. This is the bare minimum, okay, that I can take. Each asset has a lot measuring unit. This lot is different from each category. Okay, in currencies, one lot is 100,000. Okay, currencies, another currency. Okay, you can see one lot is 100,000. I don't even have to go this far. I can just click here on the eye. See at the right side, minimum, maximum is 100,000. Can keep going, but you understand the point. I'll go to commodities. I can go with metals. Let's say gold, also 100. Oh, sorry, so gold is 100. Okay, so gold is 1 to 100. As you can see, if I put here one lot, it equals 100. Silver is something else. Okay, silver in this case is 10,000. If I'll go to crude oil, it's 1,000. Oops. Okay. Now, if you notice, even if you'll go to currencies, I'll go to currencies and I'll take, let's go with Euro USD. Okay. And I'm going to go with the bare minimum. I'm going to go with 0.01. Okay. Now, let's suppose that my balance is indeed $100 and not 10,000. Okay, my balance is 100. Now, let's understand what those things are. Okay, so we can understand if 100 is enough. All right, so first we have something called value. The value is when I multiply the quantities of what I take by the price. Okay, so if I take one lot, that's 100,009 because the price is 109, right? 1.09. So 1.09 multiply 100,000. This is the outcome. Okay, so I'm going to put here the value. The value is 1.09 multiply 100,000, which comes down to 109,000. Now, nobody is expecting me to have this amount in my account to trade with. Okay, so we have a multiplier called leverage. And what the leverage is doing is it lets you buy or more. It lets you buy or sell more units with the same balance. Okay? And because of the leverage, or I should say thanks to the leverage, I can divide the value by what I multiplied with. So I can divide this by 30. And that comes down to the margin impact or requirement. Oops. Okay, and that means It's already here, right? It's already here, the answer. Okay, you can see that I'm not putting the exact number because it keeps on moving, and if I'll put the figure, it will change anyway. Okay, so this is what I need for one lot. If it's just 0.01, typically it's not 100,000 anymore, it's just 1,000. Okay, it's just 1,000. And 1,000 divided by 30 is $36. Okay, now if I am putting, let's suppose that I'm with a buy and I am putting, this is the pip. Okay, the pip is right now is 7. Okay, that's the 4th digit after the decimal. So if I will increase, let's suppose that I have 0.01 and I increase to 9. Okay, actually, you know what? Let's make it a little more than that. Okay, we're gonna change it to a higher figure. We can even change, you know what? We can even change it to 100 more. Right? Can we do that? Believe we can. Okay, so we are going to make $10. Okay, if it moves 100 pips, we're gonna make $10. Okay, if it was like this and it moves 100 pips, I'm gonna make $100. Okay, if it moves 100 pips, so I'm gonna make 100. You can see that the margin impact has changed considerably. Okay, 10 times bigger than it was, which means that with 100, just a second. I hope that everybody can hear me now. For some reason, my earphones collapsed. Okay, so as you can see, when I increased the lot size, I also increased my margin impact. Okay, but if I keep it this way, it requires a lot of movements for me to make some profits. That's actually not here. That's here. Okay, which means that it's possible. It's possible. What was the question? If you can make profit, is it enough to make profit? It is enough to make profit. Okay, but I shouldn't expect to make millions with it. Okay, let's see where it can get in a week. If it's just a single position, or maybe in a month. Let's suppose. Okay, maybe it can get to even to, I don't know, to here. It's not really realistic. Anyway, the point, guys, is that it's possible. The question is this: is if it's possible, is it enough? I don't know if it's enough. It's enough to make profit with, but again, I shouldn't expect to get too far. The other thing beside, obviously, that I need to have a lot of movement to make profit with $100, because this is what the budget allows me, I'm limited to the number of positions that I can take. Okay, you can see that I required $36 for this position. This is the bare minimum. Okay, so that means that this one I can, this is not something that I can do. To be frank, not even that. Okay, does it make sense? Do we have any questions? That's exactly right. So Freddie, you're asking if it affects the buying power. The answer is yes. Okay, it's not if it doesn't affect the buying power, that's the buying power. $100 is your buying power. Of course, it's multiplied by leverage, but at the end of the day, your balance is what you use. Okay? And as you see, this is very limiting. Okay, never mind. So the answer to this is yes, yes, with minimal positions, very carefully. Okay. If the answer is if it's possible, so yes. It's recommended. Okay. What is risk money management? Okay. Who can tell me what is risk money management? Guys, risk money management is to know that the position that I'm taking, let me give you just a simple variation. In commodities, we're going to go with, you know what, let's go with metals. Let's see, gold has been very interesting lately. Yeah. Okay, so we're gonna go with gold. Gold rose today from here. By the way, the lines that I'm putting on the chart, the lines here, are from, if I click on the tiny arrow, it falls down a list, and I'm going to choose from the list. And then I can click and drag, and then it comes to this icon, and then I can just click here and take. Okay, I don't have to click on the list again. Now gold started 2021, now 2037. Okay, risk money management. Risk money management, that means that, let's change it to 50, just as an example. And 50, let's say that I want to take sell because I think it will turn around for some reason. Okay, we're going to change to a sell. Want to take 50 ounces. Take profit and stop loss. Take profit is the price that I want the platform to remember, that it's going to close the position with the profit. It gets to this price. Okay, to understand the logic of what's happening here, when I'm buying, my intention is that the assets will go higher. When I'm selling, I want the asset to go lower. And when we are selling, we want the asset to get from 237 to 221. And we are with 50 ounces here. And we are going to change it from 2037. Okay, you can see I'm making a little more than $800. Okay, and let's suppose that I'm gonna place we're gonna paint it in red. Okay, I'm gonna put my stop loss here. The reason is because this is an edge point called resistance. This is an edge point called support. This is also support. This is also support. Okay. Above here, another resistance, another resistance. Okay, on a nutshell, support and resistance. Okay, our edge points on the chart, extreme points, and they are in levels. They're not defined by an individual support or resistance. Typically, it's the highest or the lowest. Okay. Support being the floor, resistance being the ceiling. The reason that I choose the stop loss is because it's above the resistance. You can see that the resistance defined 2048. Okay, so I'm going to change it to 2050. And I am about to lose, if God forbid I will lose, it will be $600, almost $700 out of the 10,000. Okay, is that good risk money management? So my potential gain and my potential loss. My gain is a little more than $100. My loss is almost, now it's going down, let's say 600, never mind, around there. So that means 6.5% exposure to loss. What do you guys think? Is that good risk money management? Is that a position worth a while, or is it too high? Okay. Alex, you're saying that depends how many positions you're taking. That's okay. I understand. So you're saying if it's my only position, 6.5 might be manageable. But if I have another 3 or 4 or 5, so I'm already in more than 30% exposure, and that's dangerous. Okay. Now, this is one aspect of risk money management, but not the only one. Guys, you remember that I've explained just a minute ago that the margin impact is my money requirement to hold the position, to hold or to open the position, to be honest. So that means that by taking this position, I'm using 51% of my capital. Okay? Now, what do you think? Can I take two positions like this? Can I take two positions? Well, you see here that it's gray, right? It's gray. It's no longer functional. Oops. No longer functional. Oops. Why doesn't it let me? Oh, there we go. Okay, so you see that it's not functional when I did one lot. So that means the two positions are not doable. Okay, because I don't have enough margin. So regardless if my profit and loss ratio is okay, I must manage my risk with I must acknowledge the margin that I'm using before taking the position. Because, okay, let's suppose that the position was not 50, let's suppose that it was 30. Okay, so I can take the positions. My third is already taken a lot of margin. So my total usage, okay, will be 90%. And that means that I'm not be able to hold the fourth in case something goes sideways. Okay? I'm losing less here, but let's see if I can make it happen. No, it's too complicated. Anyway, you understand. When I'm using 90%, I'm required to have 3,000 multiplied 3. Okay, so that means 9,000. Okay? So that means, in other words, if I'm using 9,000, I must have another spare margin to sustain those positions, another 3,000 to be able to do that. Okay, so obviously I cannot have another position because I don't have enough capital. Furthermore, if one of my positions goes sideways, okay, let's say even a little higher than that to this, okay, I'm already on the edge. I'm already very close to get a margin call. Okay, another quick input. Margin call is before the platform is closing my position. Okay, so quick recap. We said that the value is when I multiply the ounces by the price. Okay, the value is quantities multiply at the price per unit. Okay, as a result of using leverage, we are able to take the position with less. Okay, now just a second. Okay, now because we can take the position with less, okay, so that means that we still need to sustain this level. Otherwise, the other positions that we have, we cannot. Okay, and from the same reason that I've explained about the first question with $100, this will put me in a very dangerous position. Okay. Okay, so what is risk money management? We've already explained it, but I'm going to put a written definition. How do you reach to my question about withdrawing paying tax today. Yes, I'm getting to that. Let's see how many questions we have more. We just have another how the leverage works. We've already explained, so explained on the chart. We've already explained that. And the question here, what is risk money management? Managing your position to be able to manage the loss. Okay, so risk money management to manage the risk, maybe. Maybe managing a loss that wouldn't account. Okay. I don't really know how to. I've just explained how it works, but in a written explanation, it works a bit different. Okay, so how can I get an account manager? An account manager. Actually, an account manager is the individual who is assigned to assist you with your registration. So a regular account manager is somebody you get just by creating an account. Okay, a senior account manager is an individual who can assist you with the account and is also a trader. So of course he has the inputs that he can assist you with. Okay, and you can get an account manager through the live chat. Okay, through the live chat. And the senior account manager, after you have made a deposit. Okay. And now we're going to get to the questions that we've received. Okay. I have difficulties with withdrawal. Okay. So first of all, let me show you how to withdraw. Okay, this is a simulator account, so I must change to a real account first. Okay, and then we will see together how it works. Okay. Okay, so this should be fine. How can I show my screen again? Okay, can everybody see my screen? I want to show how to withdraw. If you can comment, because I turned it off and now it doesn't show that it's showing my screen on my software. So if you can reply that the screen is visible, let me try that out. Now it should work. I don't know if it's working. Okay. Oh, it's working. Okay. All right, so to withdraw, this is very simple, guys. Again, this is the web trader, so all I have to do is just to click on the 3 lines, click here on withdraw, and then I'm going to choose which method that I've used. Sometimes it takes like a moment or two. Okay, so I'm putting the amount that I want. Let's say I want to take $100 out. I'm gonna click next, and we're gonna fill everything here, IBAN, okay, beneficiary name, bank name, everything. Then I click withdraw. Obviously, if I have filled everything correctly, I shouldn't experience any problems. Okay, this should work. And if I use the Visa, so of course the Visa is my other option, will work the same way. And okay, so this is how you withdraw. Typically, it takes up to a few days. There is nothing too special about that. Of course, if it's been delayed, you can contact the customer service, but usually it's up to a few days. And you should keep in mind that you can only withdraw back to the place where you deposited with. Okay, there is no option to deposit it from one place and withdraw to another place. It means that if I deposited from a card, I will withdraw back to the card. If I deposited from the bank, I will withdraw back to the bank, and so on. Okay? Okay. Somebody raised their hands. Yes, feel free. Feel free. If there are any questions, feel free. Feel free to ask, as I said in the beginning. Okay? There is no need to wait. I hope it's showing my screen. Okay. All right. Let's see what other questions we have. Can you please tell us if every brokerage company unite rules well should trade? Oh, okay. About the tax. Look, each country has different tax escalators, so I don't know exactly what amount maybe you should just contact a tax advisor or your financial advisor, and they will tell you. Or you can look online. Usually, every country has its own place to report your tax. I just don't know how it works in your region, but where I'm from, we have a financial advisor. We can attend to him with our income and our things, and he's doing it for us. So I cannot know how it works on your region. Okay, try and ask somebody like that. Like I said, a financial advisor, a tax advisor, and so on. Okay, thank you for the lovely question. At this point, I see that we are slowly getting to an end. I'm going to share with you those links, and then we are going to move to analysis. Okay, let me put those things in the chat. Just a second. Okay. This is the education center. This one is to log in and make a deposit. If you want the senior account manager, you need to make a deposit. This is a FAQ and help center. This is for a real account. If somebody is still training on the demo, want to have a real account now. This is for the academy. You can find tutorials there, videos there. It's very, very educational. And the best part is for free. Okay. And lastly, I've been requested, we used to give this at the end of the webinar, but we will give this an earlier stage. Okay, this is the special promotion. And then you can give it to your senior account manager, and he is going to give you the market premium review. Okay, if you participate at the live Q&A, so you deserve a premium market review from a senior account manager. You can give it to him and ask. It's very, very informative. Okay, and it's very recommended for somebody who is a beginner to have a nice premium market review with somebody who can analyze the candles with them and can give them inputs. It's very interesting, and I highly recommend it. And beside that, I'm going to give you in a nutshell just how candlesticks are built, just the basics, and perhaps we'll speak about fundamental analysis. Again, just on a nutshell. And we will be done for today. Okay, if there are any questions, feel free to write them now. And we will move to the technical analysis side. Guys, as you can see, each candle here is different. Those may be similar, but here they look very different. Each of those candles is each of those candles is made out of two things. You have the tail and you have the body. Okay, red candle is a candle going down, green candle is a candle going up. But I want you to notice that a candle like this, okay, let me try and find it on the chart, and then oh, there we go, right in our faces. A candle like this, but I wonder if it's going to show, if it's going to let me show it to you guys. Okay, a candle like this is a candle that is maybe it's green. Okay, maybe this candle is green. We'll understand in a second why it's green. But what do you think? Is this a candle going up or is this a candle going down? Where did it move more? Downwards or upwards? Take a lucky guess. What do you think? This candle is green. That means that it ended positively. Okay, it ended higher than where it started. But my question is, what was a bigger movement, down or up? And that's a weekly candle. All of those candles are configured by different times, and the times are here. Okay, left hand side next to the search bar, I click here and it opens the minutes, hours, days, or weeks. Okay, it begins from minutes and then hours and then days, weeks, and months. And now we're looking at weeks. So each candle here is a week. Okay, keep in mind you must change the crosshair from the regular one to the crosshair with the horizontal and vertical line. Otherwise, it's a click and drag kind of an icon. Click and drag means I click and drag, okay? But if I change it to the crosshair, then I have information from the candles. Now I want you to look very closely, okay? This candle here, this candle, the 24th, like I said, this is 2 weeks ago, yeah? Maybe a little more than that. No, 2 weeks, two to 3 weeks. Let's say 2 to 3 weeks, okay? This candle opened 89,987, okay? Which is, let's put a line here, okay? Okay, 8998. So I'm going to click on it and I'm going to change it from the inside. Okay, this is where it started. This is where it ended. Okay, this is where it got in when it went down. Okay, and I think that the tail up is a bit too small for us to see, but I guess that you understand what I'm trying to show you here. Okay, so this candle, believe it or not, went down much more than it went up. It maybe ended up, but it went down much more than that. Okay? Now, why am I showing you this? What is the difference between a candle that is looking like this to a candle like to that? Okay, what is the difference between the candle that we are looking at right now, that I would call it some kind of a firefly? Maybe it's not really a hammer. Yeah, it could be a firefly, okay? Very big tail down, small tail up. Okay, what is the difference between our firefly to this lovely candle here? They're both green, almost same size, okay, no problem. What is the difference? Why this one is more interesting than that one? Who knows? Mohammed, the thin area. Okay, Mohammed, you're saying the thin area, but the thin area is what? What is so special about a candle that is like this versus a candle that is like that? They're both green at the end of the day. Pull back. Okay, pull back. So we're getting somewhere. Okay, if I look inside this candle because it's weeks, if I look at the days, what will I find? V shape. I find that it went down and then up, right? This is 24th. So 24th is where? Here, right? Okay, 24th. So that means that the 24th for where we've started. Okay, and then we see, what do we see? We see that it did go down, and then it went up again. Okay, so that means that the Australian versus the Japanese yen tried at least once to get to this level. Again, in here, it happened, but it happened over a much bigger time frame. Okay, so in this case, we understand that this creates a possibility that it will go down to this level again. It did not. It did not, as you can see, it did not. But in here, which is the other way around, it did happen. Okay, here we have down and then up. Again, down and then up. Okay, and then down. Let's see if I can show it to you guys. Apparently not. Let's try the months. It's a bit difficult. I wish I could drag and then I would have a lovely blank area to the right and then I could show you. But never mind. You need to understand that most of technical analysis is about patterns. So if I'm looking at the chart here and I identify the pattern down and then up, right? Like we had here, you can see a nice wavy kind of a form. Okay, there you go. So I can understand it's ranging through those numbers. There is a question here. The body itself, it shows a longer period of time for open and closing price. The body is simply what happened, what actually happened. What actually happened, what was the open and what was the close. This is only the figures of the beginning and the end. But the whole laugh, when we analyze a candle, we must acknowledge the whole thing. We must look, this candle has gotten this high. Look how high this candle has gotten. 92. So I know it has the potential to get to 92 because it's been there. Yeah? I don't know how fast it's going to get here or if it's going to get here, but I know that if it got into 92 and it got back to 90, it has the possibility, and here we go, to get higher again. Okay, otherwise it would have sustained that level. It would have sustained that level. It wouldn't go down. But the reason that it went down, it went up and then it went down because it got rejected. Okay, it got rejected. We're not sure about the fundamentals, but this is technical. I'm sorry that it's a bit, I see the comments, guys. I understand it's a bit too advanced. I'm sorry that there is almost nothing I can do, but this is not a beginner's webinar. I'm sorry for, and no, I unfortunately I don't have time to explain that again. We must move on to technical analysis. I'm sorry, to fundamental analysis. Okay, and in fundamental analysis, so this was just on a nutshell about technical analysis. I didn't teach you a lot, just the idea. Okay, we've learned about support and resistance. We've learned about the candlesticks. We've learned that there is open and close, and there is the whole laugh. And each candle could give us a sign for what's happening next. Okay, that's the idea. Now, fundamental analysis, it works a bit different. Okay, let's suppose that Facebook income last year was, I don't know, actually it's quarterly report, but never mind, we'll stick with years, it's just easier to explain. Income last year was not 10 bill. When we are talking about Facebook, it's a little more than that. Okay. Let's suppose that Facebook income last year was 90. Okay, let's go with 90. $90 billion was their income last year. Now they have a feature, metaverse chat. They have launched another feature, and we think that the audience will like it, investors will like it. Okay, new feature. Okay, and we think that this year they are going to rise by a little more than 10%. Okay, what do you think will happen when the forecast will be launched? What do you think will happen when we will know this forecast? Okay. Okay, when it will be announced, what do you think? Facebook will go higher or lower? Regardless if it will truly happen. We don't know. We just know that the forecast is for Facebook to go higher. I gave you the answer, but never mind. The idea here is that when something positive, at least we think that it's positive, there is a new feature and we think that it's positive, so Facebook can respond to that positively. And if, God forbid, Facebook had the problem with not security, what was it? That they had to go through a lawsuit when Zuckerberg has to answer questions. I don't remember exactly, but there was a big story about it, and he got questions about the security levels, and I don't really remember. But anyway, it doesn't really matter. Lawsuit. So what do you think at the time of the lawsuit? What happened with Facebook? Did they rise? Did they really succeed with their stock? No. Lawsuit is a negative thing, so Facebook can respond negatively. If Facebook does something positively that encourage investors, again, they will respond to that. And obviously, if the actual is higher, they've made 90 billion last year. This year, they've made 100. So after this announcement, of course, it's not guaranteed. It's not guaranteed, but typically, if they have made 90 and everything is okay, so making 100 should make them go higher. Okay, as an example. All right, guys, we have another minute. If there is something you would like to share with me regarding the webinar, regarding anything that I've said, feel free. And if not, then I wish you all a very, very profitable week. Best of luck with your trading. It's been a pleasure as always. I'm sorry, so some of the questions I couldn't answer because we didn't have the time, so I couldn't put them down. But the questions about the withdrawal and the question about the candles, I highly appreciate. And that's it. So like I said, best of luck with your trading. Thank you for participating and have a good rest of the week.